And a lot of traders are now confused, right? Because a lot of these areas here become lower time frame breaks and lower time frame BOSs, break a structure, and everyone wants to get short again the same way. This is how this is how true liquidity forms. Price breaks again, people want to get short. Price breaks again, people want to get short, and now we're up here. And what do you think is going to happen this week again? Well, right, people are going to want to get short, and this happens on all time frames. So what's funny is when I asked, do you guys remember like this look to anywhere else, somebody said Apple, and they're correct. Last week we looked at what Warren Buffett's position on this thing was, and just so you guys know, those of you that are new, Warren Buffett, which is one of the richest guys in the entire fucking world from a trading perspective, entered Apple, and it's one of his biggest holdings. Now he bought Apple initially in 2016. That was the first time he ever bought Apple. And I'm just going to go and find 2016 and draw a line, okay? Now I want you to compare, and this is a monthly chart, I want you to compare this right here, this exact moment here, the prior action, remember it, remember the prior action of bullishness, the pause, the continuation of bullishness, the pause to the MAs, and then this buildup of a little, let's say a high. And then I want you to compare that to what one of our members just posted as one of the predictions I made a few weeks ago, actually a few months ago. So from webinar 147, which was what? The prediction from the few weeks / months ago, when we looked at this breakout through this high, this should remind you of that exact same chart, right? It's very likely that if you are a Warren Buffett-like figure or someone that was maybe more long-term based, this is the trade that you're looking for. This is where a lot of large smart money, whatever you want to call it, bought into the position initially and are now holding for that potential move. Because the reality behind this is that if a move is going to come, what do you notice about it, right? Once it's bought, it never returns. So this is one of those moments where if you bought it, if it's going to be a winner, this will not return, right? And very simply, this will not return. So very simply, this is how you, even at the very, very beginning, set a precedent for how trends function and how you can easily keep your risk on the downside very low with your upside being extremely profitable, right? This is how it works. Without even looking at all the entry criteria, without even looking at all the other time frames, just understanding simply that if you have a one-sided market or a trending-based market or a clear market that is moving very clearly in regards to the tools that we use, and then at the same time sets up one of these moves, right, and then doesn't return, which is what's happening right now, the precedent is set for what this move wants to do, right? If you really want to do like a game of it and consider like, the comparison. So that moment that we just entered kind of looks like this, kind of looks like this. Oh, this one gets traded back to. This one, not much there just yet, but kind of looks like this. This one gets traded back to. Kind of looks like, actually that's it. So it really kind of looks like this, right? This went on to then make a move that was relatively very large. And if anything, if you want to just do the comparative game, right? This is likely, if it is to deliver, going to make a move to around $386. So basically in a few years from now, in 2 years from now, a year from now, 3 years from now, when we're in our webinar like whatever, 300 something, 400 something, it's very likely that Google will be up here at 340, and you're going to hear the same thing from me. Hey guys, back here we spoke about this move. You know what it looked like? It looked like the same move in 2016. You know what it also looked like? It looked like the same move on NASDAQ or US 100, whatever you want to call it, back here. Okay? In 2023. Because the reality of this market is that it never changes, okay? It delivers the exact same thing over and over and over again, but we just need to be, as traders, we need to figure out where those moments are and then put our risk behind it, right? Because we've now done the testing and we can easily get involved. So I just want to remind you guys, as we kind of look at some of this stuff, none of it's new. A lot of it is just repetitive, right? It's the exact same thing over and over and over again. It's happening on all time frames based on the kind of trader you are. So that brings me to kind of this last week for me, right? We've been extremely bullish on NASDAQ. Again, prior members to confirm this, what did this, when price was around here in May, at the start of May? Right here where we started to get long on this market and started to watch for longs and started continuing to watch. And then they traded that context. And as a result of trading that context, this is the market they showed up every day to trade. And again, even as a beginner, so for those of you that are completely brand new to this mentorship today, even as a beginner, if I simply look to take, let's go to a 1 hour chart, okay? If I simply, within that leg, so that would be from here, Let me go ahead and go back here really quick. So around here is when we got bullish on this market. If at this point, I simply told you for your system, you are going to go to a 1 hour chart, given the fact that everything's bullish, and you're going to enter trades with a larger stop and look at 1 to 2. Do you think you could get funded within this last 6 months, 4 months, 3 months with a system like that with nothing else under you? Now remember, I'm telling you this because I want everyone that's new to recognize that what we do isn't complex. It's not this insane thing that you'll never figure out. A little bit of a lower time frame, and without even confirming, this is your version of confirmation, you're saying, okay, I will enter this trade. Then if that one works, I will enter this trade. Or like, if this one gets tapped in, I'll cancel this, and then I'll enter it. So I'll just go like this. This is the trade I'm entering next. Okay, you get tapped in. Now you stay in it until you either get taken out or you make profit. That's all you do. And once that happens, you can set up new trades. So let's go through it. Okay, so we wait. Let's actually go to the higher time frame to make it even easier. So now we wait for one of these to deliver. I don't know if it will, but we'll wait. So we wait, nothing yet. Comes down. Looks like it's about to deliver. We'll go back to the hourly. We'll wait. Okay, so if it taps us at a win, we'll enter a new trade right here. That's it. Okay, so we get tapped in. That's +2. Let's go back to the daily and watch this one deliver now. Again, same thing. We'll set up another trade at that same point. That's basically an hourly trade. Okay, there we are. That's it. Okay, with nothing else. So again, when you trade a system like this, where you basically kind of throw a dart on a lower time frame at a good context, does that mean your earning potential is going to be greater on average or lower on average? Yep. Well, your actual earnings on this, right, will be lower than average based on someone that has refined a system, right? But you're already going to be doing better on average than someone has no idea what the fuck they're doing and is trading every direction of the market. Because again, what do a lot of you know was happening during this point right here? Close to every Instagram trader, every YouTuber was looking to sell at either at this resistance, either at this liquidity pool above, either at this imbalance in here, either at this SND or OB in here. Okay? You need to understand how money builds up and then how it gets taken out. And a lot of traders are now confused, right? Because a lot of these areas here become lower time frame breaks and lower time frame BOSs, break a structure, and everyone wants to get short again the same way. This is how this is how true liquidity forms. Price breaks again, people want to get short. Price breaks again, people want to get short. And now we're up here. And what do you think is going to happen this week again? Well, right, people are going to want to get short. And this happens on all time frames, right? So yeah, I mean, don't make that mistake. But again, I want to show everyone that's brand new even today that you don't have to have an insane system under you to actually, quote unquote, make money, right? So for instance, system in general, where you, on the next potential pullback and then buy stop something like this, for a 1 to 2, would a system like this likely make you money? Yes or no? So if you simply waited for this to pull back and you buy stop somewhere higher, would a system like this over time, do you think, make you money? The answer, funny enough, is actually yeah. And figure out good context or have a... You already have done a lot of the work. And you can now refine further to get to a very, very well thought out system that then can make you even more money, right? Because again, the way I've thought about it is, if a lot of you remember, the first reading of the tool that was very bullish happened around here. On this break right here, almost everything on the screener read bullish for NASDAQ, just so you guys know. So since here, this has remained to be the case, right? Now that means that if I took one of these trades, right, and I looked at them as a 1 to 2, and I took them over and over again, only once I've had a trade deliver. So boom, price breaks, I buy it. 1 to 2, I buy it. 1 to 2, I buy it. 1 to 2, I buy it. I buy it, take a loss. After losing, I set up a long higher up. 1 to 2 just delivered. What do I do next? I buy right here. If this was your entire system over the last year and a half, 2, 4, 6, 8, 7, 7 RR made. Okay? Now, at higher risk, that's 14 RR, right? Or 14%. At lower risk, that's 3.5%. The point right now is not to show you the money side. It's to show you that you can have profitability in the markets or in a market with a simple approach to context. Does everyone understand, even if you're brand new, and again, this is where I want to make sure that people that are brand new here understand this. Without nothing more than a tool that shows you context, and then buying with a larger stop and a higher RR multiple of profit, you can have an underlying profitable system. Now the system, I'm not telling you the system is going to make you infinite crazy amounts of money that you can't even consider. What the fuck, so much RR? I'm showing you firsthand that if you have a system that's simpler, you give up the potential of higher earnings, but you have a system that can still return capital. That is a very important thing to remember and a very powerful thing to know, right? That means, again, and this might not even be enough for a lot of you, but that's okay. That means on, for instance, a non-scaled $1 million Ment funded account, right? Ment funded account at 0.5% risk, so 0.5, not 1%, but 0.5% risk. That means in a year, you would have only done 35K in earnings at a 1 mil funded account with generally low risk profile. Now, for some of you, that might not be enough, and you're like, damn, trading is nonsense. I don't want to do that, right? But for some of you, this number already meets / gets close to what you already make at a job that you likely worked probably 15 to 20 years to get, right? So a lot of us, including myself, guys, I don't do this to shun anyone because I have respect for anyone that does close to everything in this world, especially if they choose to do it. A lot of us, right, spend about 15 to 20 years in a certain schooling, through college, whatever it might be, to get to a job that likely puts us at an average of around 40 to 80, and in the highest echelons, 120K a year. Now, for a system that you could probably take about a month to 2 months to really get down, if it's as simple as something like this: good context, buy 1 to 2, big stop loss 1 to 2, re-enter if it wins, wait for a pullback and enter again if you lose. So on a yearly average, based on a just 1 mil non-funded account at 0.5% risk, you're looking at an extra 35K added to your yearly balance. Now, is that something that sounds achievable or good or fair to you if you're starting out kind of brand new, first few months in a trading system, and then have the confidence to just get one of these accounts, right? Does that sound like something that's very fair to you based on the time that you would spend to get there? I think, in my personal opinion, that's insane how fair that is, right? Like, that's absolutely wild what's available, right? And then don't even think about the fact that once you scale an account up, which is now possible, and you say this is at 5 mil, all of a sudden a 5 mil account in that same year and a half has returned you 175K. Now again, if I asked you, would you be okay with a system like this if it returned you, on average, 150K every year and a half? Would you be okay with a system like that and potentially even quit your given job right now or start doing this as a full-time thing if that's what was available, or that's the kind of confidence you had behind your system, right? A lot of people, I would assume about 90-95% of people in this mentorship would say yes, right? Because I know that likely 5 to 10 to 20% of the people here have earnings in the real world that might even exceed this.